What's going on, guys? Steve here again. If you're returning back to the channel, I welcome you. If it's your first time to the channel, welcome as well. Today I want to talk to you about stock market mistakes I've made when I first began investing. And some of them are crazy and some of them are just out of control. But this is stuff that a lot of investors, fall under. But I want to give you my story so, hopefully it won't happen to you. I started investing probably about 5 years ago. I started getting into the stock market and trading and stuff like that. My first mistake I made after I set up my Ameritrade account and began pick my first stock, basically. One of the mistakes I made was I went and got my first two stocks, right? And I would jump back out of them like daily. Like I'd get a stock and then I hear about another stock and then I'm like, oh man, and then it was just crazy, like how you think you got a plan until you get hit with all these choices of companies that you can get. And I didn't know nothing about balance statements and balance sheets and how to judge a company, if it's a good investment or not. I was just going by names. So first thing is, don't go by a company because of its name. Like Apple's good companies and stuff like that, like Johnson & Johnson and things like that. But you can't be hung up on the name of something. Something could be hot right now and then next year it's not, you won't hear nothing else about it. I was a victim of that. Like I jumped on GE immediately. Like, oh, I see light bulbs at Home Depot and GE is everywhere. GE is big. But I didn't know that they were having problems with their CEO. And he wound up getting fired or he resigned. But they had a whole bunch of projects that they're now trying to get rid of in debt. So it's like I took a sink in that. And it's like one of the things I could have avoided. Another thing I could have avoided was I would tell people I was in the market and they would be like, oh, you need to invest in this and you need to invest in that. Man, it's hot. You need to jump on this. Like some people now, hey, might be hearing, hey, crypto is hitting. It's down. Jump on it and this and that. And guys, you got to do what's right for you. That's why having a plan and a goal when you first start investing, and then having little goals, going in one in front of the other, just small steps to get where you want to go in the long term, helps out. I jumped in like, oh man, I'll be good at this. I know what companies to buy, I know what this and I know what that, but it's not more than just picking a company. It's a lot more that goes into that. Another mistake I made, and this is a huge mistake. I would get a stock today, and then tomorrow I would trade out of the stock, right? Just one share, I would trade out of the stock because it made $1.20, or it might have went up 5-6%. And I'm like, oh man. And I would sell out and then keep the money and think I was doing something. And a lot of us confuse the stock market with the casino. It's not. I had somebody say one time, oh yeah, I used to play the stock market. What do you mean play the stock market? What do you mean? It's not a game. I mean, people lose everything they got. Back in the 20s, I mean, it don't really happen now like that. But I mean, you don't know. This is not a game. This is like your life. Especially for me, I wanted to be a long-term investor. I wanted to build for my retirement. I wanted to do this. I wanted to do that. I mean, I own my own business. I'm trying to, create a means to the end of me making money and, not having to work and want to retire early. I see all these other people, that I know personally and, YouTubers. Yeah, excuse me, it's hot as heck out here. And YouTubers, saying, hey, I retired early, I want to, and everybody wants to be a part of that. Everybody wants something from that. But I would jump in and out of the stocks And then like I might see something tomorrow like Hershey. Ooh, Hershey got to come. You can buy Hershey stock, and I'll sell something to pay that. What happens is, say like you got $1,000 you invested. You do that every day. Dollar here you losing, dollar there you losing. And when I came on, they were charging fees, like $1 a trade. Man, I looked up, I had like $85 in like 3 days. I'm like, what the heck? What happened? And I'm like, man, it's eating my money up. Now you learned a valuable lesson. I mean, granted, it was early in my investment career, and the little $15 didn't really kill me. But what if I had jumped in there and I had $10,000, $20,000? I'd have lost hundreds. Just being stupid, you know? Another thing that I did that I didn't know along that trading every day. Now, I'm a long-term dividend investor. What I was doing was, and this is me not knowing, I didn't know. And like, your broker, a lot of times your broker, like, from my knowledge, I know that Ameritrade has this Thinkorswim program. I invest anybody that's, in Ameritrade to just look at it. Just take a look at it, because it's free. They offer it to you. Me, I'm like, nah, I know what I'm doing, because I want to look like I'm somebody in front of the people. It could have saved me a lot of headaches and a lot of money, What I didn't know was, if you buy stock, say I buy stock in the morning when the market open, and the stock run up, I might have 60 shares and they go up $2, I'll make $120, right? And I jump out of that stock, that's called a round trip trade, depending on how your thing is set up. Meaning you jumped out of something, you sold it, and then like later on, before the market closes, I'm like, you know what, I shouldn't have sold it, and I jump back in. That's called a round trip trade. A round trip trade. That is frowned upon, and you will get penalized on Ameritrade. And what'll happen is, if you do that 3 times, they give you 3 times to do it. You do it 3 times, right? And you get alerts saying, hey, you did a round trip trade, don't do that. They don't know you don't know what that means. So I did it like 6 times one time in a day. And when the market closed the next day, I went in there, my account, they were like, you need 25,000. So the account was like negative 18,000. I'm like, negative 18,000? What is that? They're like, no, you classified as a day trader, so you got to have at least $25,000 in your account, because you jumping in and out, because day traders trade when the market opens and when it closes, and that's it. And I was like, man, look, how am I gonna get out of this? So I had to go in there and call Ameritrade, and they explained it to me, and I'm looking stupid as it can be. And I'm like, oh, please, don't do me like that, And they wind up releasing it. They're like, if we don't do it one time, you mess up again, man, you're gonna have to pay all that stuff to even start trading again. I was like, man, I didn't know it was serious like that. So I mean, those are just some of the things I went through. Like, one more thing to tell you is, don't deal with the fear of missing out. I used to watch CNBC, right? Closing Bell and all that stuff when I get in from work. And they'd be like, oh, such and such done went up 3%. And all they doing is talk about it, because that's like, might be the highest stock rise of a stock that day, so it's just the news. And you watching it, and all of a sudden you compelled to jump in there and get it, and then the next day it take like a 3-week hit. I can't tell you the countless times I done did that, because I didn't know, But I just wanted to share a couple of, I got other mistakes I made. I'll probably make another video, but off the top of my head, I just figured I'd stop. It hit me, I figured I'd stop and just talk about it. Once you get your stocks, be very sure that that's the stock you want. You know what I mean? And stick with it. You know what I mean? Have confidence in yourself, stick with it, and everything will work out fine. But don't be like me, man. I made a lot of stupid mistakes, man. I swear to God, I made a lot of dumb mistakes. And I cost myself thousands of dollars. I know better now, but, do your research on stocks. Don't just pick something because of its name. Or don't just pick something because you tuned in the TV, or like you looked on your brokerage account and seen something went up 5%. It can also go down 7, 10%. You know, and I'm not saying that's to scare you away, but you understand stocks move up and they move down. Whether you buy it today or not, you're still going to get in there, especially if you dollar cost average, which is basically every month put a certain amount in and buy a certain amount of stocks, whether it's high or low. You'll always meet in the middle. But you know, that's it for now. I'm out here baking. So if you like the content and it was helpful to you, or you got a good laugh at my expense, hit the thumbs up button, and then like and subscribe. Like I say, I upload videos daily and I enjoy it, so I look forward to hearing from you again, and we'll see you. Take care.